Hi, Assalamualaikum. My name is Nur Hamiza Shazwani binti Mat from BA242C. For assignment 3 of subject Financial Market and Banking Services, we, Group 6, will be discussed on banking regulation and management, and we are choosing the Public Bank Group. The Public Bank Group has achieved 50 years of banking excellence. By any measure of corporate longevity, this is an achievement to be proud of. The commitment of founder and chairman Tan Sri Datuk Sri Dr. Teh Hong Piao to build the business on solid foundation has ensured that the group continues to deliver sustainable value to its multiple stakeholders. As the third largest banking group in Malaysia, the Public Bank Group believes that sustainable value is created when business is conducted in a responsible manner which seeks to achieve mutually supportive outcomes for all its stakeholders. When the business of the group is conducted with integrity, its reputation and standing is enhanced, leading to greater competitiveness and creating sustainable returns in the long run for all its stakeholders. For the group, sustainability means building a business model that is focused on delivering value creation over the long term for its customers, employees, shareholders, society, and environment. During the year, the Public Bank Group continues to maintain sustainable practices in its core business of banking, which is well demonstrated in its support to its customers, its engagement with its employees, its contribution to the communities in which it operates, and the conservation of the environment. As a testimony to the group's corporate responsibility initiatives, Public Bank has been included in the FTSE4Good Bursa Malaysia Index in 2015. The FTSE4Good measures the performance of companies that meet globally recognized corporate responsibility standards.
Assalamualaikum warahmatullahi wabarakatuh. My name is Wanur Alisha and I'm from BA2422C, and now I'm going to present about liquidity management. Liquidity management is a method for a business to satisfy its short-term and monetary obligations without incurring a significant loss. To put it another way, the corporation will manage its assets to ensure financial stability. Bank, on the other hand, is one of the few organizations that has consistently examined its liquidity and collateral responsibilities without incurring significant losses. Moving on to the next slide is about current ratio. Current ratio is used to measure the company's ability to pay its short-term obligations within 1 year. From the table, we can see that the current ratio for Public Bank in 2019 is 0.16 times, which is higher than in 2020, which is 0.5 times. The higher the current ratio, the more capable of the company in paying its obligations because it has a larger proportion of short-term asset value relative to the value of its short-term liabilities. And the next is investment maturing in less than 1 year ratio. From the table, we can see the investment maturing in less than 1 year ratio for Public Bank in 2019 is higher with the amount of 0.17% than in the 2020 with only 0.16%. It shows that the performance of Public Bank in 2019 is better than 2020 as it has more liquid assets. Next, we're moving to the loans to total assets ratio. From the table, we can see loans to total asset for Public Bank in 2020 is higher than 2019, which is 75.97%, while in 2019 only 75.89%. The higher the loan, the lower the liquidity, the higher the credit risk for the bank. It means that Public Bank gives more loans than it has in deposits, low maturities, and rate sensitivity of liabilities that affect market interest rate and movements. And then the last ratio under liquidity ratio is purchase liability to total assets. From the table, we can see the Public Bank shows a higher ratio in 2020 compared to year 2019, which is 0.0449% to 0.0019% in purchase liabilities to total assets. The higher the ratio, the higher the degree of leverage, and the higher the risk of investing in the company. Assets financed by shareholders of Public Bank in 2020 are higher than assets financed by debts in 2019.
Assalamualaikum, my name is Nur Farihan binti Muhammad Fikri from BA242C Group 6. I will continue with asset and liability management. Asset and liability management is a practice used by financial institutions to mitigate financial risk resulting from a mismatch of assets and liabilities. The asset and liability management strategies employ a combination of risk management and financial planning. The practice of asset and liability management can include many factors such as strategic allocation of assets, risk mitigation, adjustment of regulatory and capital frameworks. Some of the common risks addressed by asset and liability management are interest rate risk and liquidity risk. There are areas of considerations for managing assets and liability used by the financial institutions. The first one is profitability. It is to find borrowers who will pay high interest rate, unlikely to default on their loans. The next one is risk. To purchase securities with high returns, low risk, and attempt to lower the risk by diversifying. The third one is regulatory requirements. To manage the liquidity of its assets so that it can satisfy the reserve requirement without bearing huge costs. Next one is flexibility. Banks should explore ways in which the liabilities on their balance sheet could provide them with reserve and liquidity. We'll move to financial analysis and ratio analysis. Profitability ratios based on the calculation return on assets for Public Bank Berhad in 2019 is 1.29%, which is higher than year 2020 with return on assets only 1.09%. High return on assets for Public Bank Berhad in 2019 might be due to high non-interest income. The return on assets for the year 2020 is low due to insufficient non-interest income and low interest revenue that are too conservative defense. Next one is return on equity. Return on equity measures the profitability by revealing how much a profit company generates with the money that shareholders have invested. Based on calculation, Public Bank Berhad recorded a higher return on equity of 12.47% in 2019, while during year 2020 only 10.19%. Their profitability ratios measure the financial performance and efficiency of bank. Therefore, it means Public Bank Berhad equity holder earned more during year 2019. Next one is interest spread. Based on calculation, interest spread for Public Bank Berhad in 2019 is 1.72%, which is higher than year 2020. A higher spread indicates a higher profit margin for the bank. Therefore, it shows that Public Bank Berhad in year 2019 able to invest in assets more than because of its sources of funding.
My name is Asia and now I'm presenting about asset quality and credit quality. Asset quality refers to the assessment of credit risk associated with a particular asset, such as bond and stock portfolio. Asset quality is an important determinant of risk that profoundly impact liquidity and cost. Analysts go to great lengths to make sure they issue the most accurate evaluation possible. The asset quality and credit quality for Public Bank Berhad in year 2019 is primarily good but has several weaknesses, while in 2020 the bank has a critical financial weaknesses that can affect the bank performance. Next is capital adequacy. Capital adequacy ratio is a measurement of a bank available capital expressed as a percentage of a bank risk-weighted credit exposure. The capital adequacy ratio, also known as capital to risk-weighted asset ratio, is used to protect depositors and promote the stability and efficiency of financial system around the world. Based on the annual report year 2019 and 2020 of Public Bank Berhad has enough capital adequacy, which is 2019 is 90% and 2020 is 90.58%, more than 8%. That means public bank is enough capital.
Okay, so here we can conclude that the result is based on the banking institution above. There are good results but bad results also. So, for the improvement of the performance, we can suggest the banking institution to check the credibility of potential borrowers, engage principles of good lending, sufficient guarantee, or tedious analysis in the credit evaluation process. There will be a better result if the bank adopts these prudent banking practices to overcome any problems to improve their performance.